Good afternoon and welcome to the National Conference of Bar Presidents 21st Century Lawyer virtual session. My name is Aurora Austriaco and I will be your moderator for today. Today's session is on SBA Economic Injury Disaster Loan and Paycheck Protection Plan under the CARES Stimulus Act. Before I introduce our speaker and our presenter today, I have a few housekeeping items that I'd like to mention. If you have not already opened your navigation menu, either at the top or bottom of your screen, please make sure to do so. Within the menu options, you will see a Q&A box. There will be time for Q&A at the end of the session for attendees to ask questions and share. Please post your questions in the Q&A box throughout the program. And as we get them, we will read those questions. In addition, there's a chat box which can be used to communicate with me, other attendees, or speakers. I'd like to do a quick check to make sure the chat box is working. So please type in your name and where you're from. I'll give you about 5 seconds to do that. And make sure that you let us know where you're from. Appreciate it all. Thank you. Make sure to send your questions and comments in the chat box to the entire audience so that everyone can see and respond. With all that taken care of, I think we can get started now. Please join me in welcoming our speaker today, Mr. Robert Steiner. Mr. Steiner serves as District Director for the U.S. Small Business Administration's Illinois District Office. He joined the SBA in February 2013 and leads SBA's operations across the state of Illinois. Prior to joining the SBA, Mr. Steiner served with the Department of Homeland Security's Federal Protective Service. With the Federal Protective Service, he managed a $68 million budget while overseeing all human capital, logistics, procurement, and support activities. A United States Naval Academy graduate, he began his career in the military, serving 10 years in the United States Navy as a commissioned officer and naval aviator. During his naval career, he deployed multiple times in support of naval operations across the world. Mr. Steiner, welcome and thank you for joining us.
Thanks, Aurora. I really appreciate the opportunity to be here, and thanks to everybody who joined today. This is great.
And as I understand it, we have over 200 attendees today, so we've got a lot of people who are really interested in what you've got to tell us. So let's get started. I know there are many programs that the SBA is offering, but we will focus on 2 programs today, particularly the Economic Injury Disaster and Loan Program, or EIDL for short. And then the other one is the Paycheck Protection Act, which is called PPP as well. So let's start with the EIDL. And I know you, Bo, so I'm just going to call you Bo throughout the program if you don't mind.
Of course.
So tell us about the program and the type of loan it is.
Sure. So the EIDL stands for Economic Injury Disaster Loan Program. This is a program that's been around for some time, typically used in response to physical disasters. So think hurricanes, things like that. But in this case, in the case of the coronavirus, it's been authorized for use. And it's basically a working capital loan of up to $2 million at low interest rates and long term. So interest rates at 3.75% for businesses, 2.75% for nonprofits, and up to 30-year term. Payments are deferred for 12 months. And eligible organizations that can apply for the loan include small businesses, those businesses of 500 employees or less. Most private nonprofits are eligible for the program. This is a direct loan program. So you're making application to the SBA through our website, as opposed to our conventional loan programs, which go through lenders, 7A and 504 lenders in our communities. So again, it's a direct loan program up to $2 million working capital.
So Bo, so you get a loan, how can the funds be used?
Sure. So pretty much any kind of working capital requirement that you might have is the use of funds. So it could be payroll, it could be utilities, rent, lease, fixed debts, your normal ongoing expenses that you would be able to pay normally had it not been for the impact of the coronavirus. Things that you can't use the funds for are, for example, to refinance an existing loan, to buy new equipment, buy a building. Those sorts of things are not eligible use of the proceeds for this program. But other than that, there's pretty wide latitude.
So in terms of the loan approval criteria, is it similar to a regular SBA loan, or this is a much less strict application?
Sure. So it's a super streamlined process. Basically, you apply through SBA's online loan application system. It's very TurboTax style, where it kind of walks you through step by step what you need to do, tells you what fields are required, and it's all dependent on the information you put in. So we're not asking you to upload any documentation. We're not asking you to do anything like that as part of the process. You're just putting the information in, you're asserting that it's correct, everything including putting in your routing information for direct deposit and those sorts of things. So I would estimate that most businesses and nonprofits can fill it out in 30 to 45 minutes, hit submit, and it goes up to the loan center. So it's pretty fast.
Yeah, so from application to approval, what is the time period that we're looking at?
Right. So it's our guidelines right now are it's around 21 days from application to decision. And then from there, 5 to 7 days for actual disbursement. So we're notionally saying 30 days. However, we are constantly implementing new technology to help expedite that process. So hopefully it'll be faster even than that.
Is there any collateral requirement for this one, which is obviously a little bit different than what we would get with the Paycheck Protection Loan Program?
So there are some collateral requirements, although they've also evolved over the more recently. So collateral is required on loans of $500,000 or more, and a personal guarantee is required on loans of $200,000 or more. When we initially rolled this out, those numbers were collateral was required on any loan over $25,000, and all loans required a personal guarantee. But that's evolved to make sure that more people have access to the program.
So Bo, this is great when you have real estate, you can actually, give a good collateral. But for, let's say, a service industry, let's just say lawyers, for instance, a law firm, they really don't have any collateral unless they own their own building. Would not having a collateral be a reason for rejecting the loan?
So no. So if for those loans that are more than $500,000 where we would look for collateral, we would take it. However, it's not going to be a reason that you're declined if you don't have that collateral. So to your point, yeah, it's we always like to say that, we understand that a lot of businesses don't have that access to collateral and resources like that. And we don't want that to be an excluder that limits the ability of those businesses that are still employing people and delivering services from having access to the programs.
Now, when we were talking, you mentioned about the EIDL Advance, and is that a new program that's being offered, or it's always been part of the EIDL? And maybe you can talk a little bit more about what that is. Yeah,
sure. So the EIDL Advance is basically an add-on to the Economic Injury Disaster Loan Program. And what it is when you apply for the EIDL program, you can also apply for an advance. The intent is that through that advance, within 3 days of a complete application, that basically the Treasury will issue you an advance amount of up to $10,000. So trying to get capital in the hands of the small business as quickly as possible. That's even ahead of the actual loan decision. So you get the advance in 3 days of that complete application. Even if you're declined for the loan, you still retain that advance, and you do not have to pay it back. It's basically a grant. If you're approved for the loan, then that amount of that advance is again it's a grant, so it would be taken out of your overall principal. So let's say you received an advance of $5,000, total loan that they approved was 100,000, then the actual principal on that loan would be 95,000 because they subtract out that 5,000.
So this is one that I'm kind of, as I understand it is a grant, so you don't pay it back. So for tax purposes though, which I know I'm going to ask later on with the Paycheck Protection Plan, for tax purposes, I mean, how does this affect our taxes? I mean, is it like a gift, you know?
Right. My understanding is that the advance, for the purposes, typically in a forgiven kind of loan or a grant or something like that, is looked at as income. But in the case of the EIDL advance, it is not looked at as income. So there is no adverse tax impact to your tax situation. In other words, that $5,000 would not be considered taxable income.
That's really good to know, and hopefully our viewers and listeners are taking note of this one. So let's go to the Paycheck Protection Program, which is one that is offered by the SBA, but also came out from the CARES Stimulus Act that was actually just passed on March 27th. I do know that it just opened up, the application for PPP just opened up last Friday, April 3rd. So I know a lot of people who are actually applying for this. So let's talk about PPP. Tell us about what that program is.
So PPP is a loan program, up to $10 million loan to small businesses and private nonprofits, as well as 1099 contractors. Basically, the gist of the loan is it's a loan that you will apply to a bank to provide the funding. But the key element of this program is that the loan is up to 100% forgivable as long as the proceeds of that loan, at least 75%, were used for payroll and payroll expenses. And I think it's notable to say that payroll expenses is not just compensation, it's also benefits, other costs, state and local taxes, those sorts of costs that you incur to support your overall payroll load.
And who qualifies for this loan? Is it similar to SBA, or is it all businesses, regardless of what you're doing?
So it's more or less all small businesses with 500 or fewer employees are eligible to participate, as well as nonprofits. Nonprofits don't have a size constraint on them. So those are the types of businesses that are eligible. There are some limitations, but those are pretty kind of esoteric and unique that I don't think for the purposes of this conversation we get to. But yeah, so it's almost all businesses that are considered small by those standards.
And so you said it's the loan proceeds have to be used for payroll. Is it a certain amount up to 10 million? So if you've got a business, you're applying for a loan, which is equivalent to, as I understand the rules, 2.5 times the average monthly payroll.
Right.
Is that right?
Yeah. So the way the program is set up is you'll look at 12-month look back on payroll expenses, and again that includes everything from salary, benefits, all those sorts of things. Do that 12-month kind of divide, take that total amount, divide by 12. Note that you will have to also pull out any compensation above $100,000 per employee. So if you have higher paid people, a certain amount of that payroll is not eligible as part of the program. But that, you're right, it's 2.5 times that that monthly average payroll is what the loan amount is.
And is that entire loan forgivable? I know you mentioned, what are the conditions for it to be not forgivable versus actually being 100% forgivable?
Sure. So loan proceeds from the Paycheck Protection Program can be used for payroll and payroll expenses broadly. But they can also be used, for example, for mortgage expenses, lease expenses, utilities. So there are some other uses. key thing to take away from this is that for the purposes of forgiveness, at least 75% of the proceeds of that loan need to go toward payroll and payroll expenses. And I would also note that part of that is looking at headcount as well. So your headcount upfront versus your headcount for the purposes of what your payroll was. So again, yeah, if it's more than 75% payroll and payroll expenses, then that 100% of that loan would be forgiven, even if you use the other 25% for those other things like mortgage or leases or utilities.
And one last question, and we're going to open up to questions that are being sent. The terms of the loan, Bo, you said, you already said the terms up to 2.5 times, capped at 10 million. Payroll costs will be capped at 100,000 annualized per person. What is the interest rate on this one? I've seen it at 0.5%. Now it's 1%. I'm not sure what the interest rate of the loan is if it becomes a loan and not a forgivable loan.
Sure. Yeah. So the interest rate is 1 year, and the term is the interest rate is 1%, and the term is 2 years for the loan. And again, this is a guaranteed loan program. So mechanically, the way that it works is you apply to your bank or whatever lending institution, approved lending institution for the program. You make application to them. They actually fund that loan out of their capital. What happens then is, I think in the rule right now, it says 7 weeks downstream, the bank can look at your expenses that you would provide to them to say, okay, we can reasonably assume that over 75% of the expenses incurred were related to payroll, at which point they make application to the SBA for the forgiveness. And then the Treasury, on the behalf of the borrower, pays that loan off. So they're paying the bank off for that loan, and that's how the loan gets that's how the bank gets their money back ultimately.
All right, I'm gonna read some questions that have been sent, and we've got lots of questions here about. So from Renee Stackhouse, my biggest question is, it seems like many are applying for aid now, but is there a cutoff date, and can someone seek help in the fall or winter if they need help?
Sure. So as of right now, the way the program works, so really two separate cases, right? So if you're talking about the Economic Injury Disaster Loan Program, you can still make application to that program through, I believe it's December 30th of 2020. So that program is, from the standpoint of application deadlines, that's what that looks like. From the standpoint of the PPP, on the other hand, I'd say 2 key dates that I would put in everybody's head. One is, as of February 15th, you have to have been in business and have had payroll expense, so employees on staff, or minimally payroll expenses. The program application period ends June 30th of 2020. So for the purposes of the PPP, it's a shorter term window to apply.
All right, from Joel Spivak, can you obtain a payroll protection loan as well as the SBA EIDL loan?
Sure. Common question that we hear a lot, and the answer is yes, but under certain circumstances. So the best way that I could put it is you cannot use proceeds from the EIDL and PPP for the same thing. So if you're using the EIDL for payroll and then you look to apply to the PPP for payroll, then the way that the rule reads right now is that you would be expected to refinance out of that EIDL and refinance all those that loan into the PPP loan. So, but let's say that you use the EIDL loan for rent or lease payments, other working capital costs, and then you were to use the PPP just for payroll, then that is an appropriate instance where you could access both as a resource.
From Krista Hogan, is there an advantage in applying later for an EIDL after more loss is shown?
I would say no. My perspective is that it's a first in, first out program. So if you are showing some impacts, or you believe that you will experience impacts due to what's going on in your particular area, then I would recommend applying now so that you get in the queue, so to speak, because these aren't unlimited resources, right? There's still going to be a cap on how many EIDL and PPP loans are available. So, if you are experiencing challenges, then, recommend that you apply now. But again, these programs, both of them are for businesses that have experienced or expect to experience financial challenges due to the coronavirus. It's not just kind of out there just to be like, hey, it looks like it's a good chance to get some free money, basically.
So this is from James Antoniano, and Bo, this is for your information, which is a really nice message. James' son is a 2004 Academy grad and an F-18 pilot who flew off the GW and the Kitty Hawk and still flies in the reserve out of Fallon.
All right. I was on the Kitty Hawk.
There you go.
Yeah.
So thank you for that comment, James. From Jill Snitcher, I've heard conflicting information about whether this applies to 501c6 organizations. Does it apply to 501c6 associations?
So the latest guidance we have right now is that 501c6s are not eligible to apply for the EIDL or the PPP program. That said, these things are very fluid, so I would continue to stay on top of this and stay updated to just keep your eye on it.
From John Kautzman, is it right that the disaster loan is sought through an application directly to the SBA versus a PPP loan goes through your bank?
That is correct, and you would just go to the online loan application. One thing I would note is, as you can imagine, the volume for these programs is super high, given that this is really a national disaster in a lot of ways. So we've gone through a couple of iterations of application process. And if you applied prior to last Monday, basically, and you are interested in the economic injury disaster loan advance, you're going to have to go back in and reapply for the advance through the existing loan application system. So that would be the first thing that I would say. Second thing is if you applied we had an interim solution that was basically you uploaded documents through box.com. In that instance, we're recommending that you go back and resubmit through the new loan application process. As I mentioned, it's like 30 to 45 minutes to get through the thing. It'll just streamline your process. Now, your spot in the queue, so to speak, is held, so they know when you submitted through the box application, but this will just streamline everything and make sure it goes much faster for you.
This one is from Bruce Barra, and I'm assuming, Bruce, you're asking for the EIDL on this one. If you are a corporation, who does the personal guarantee over $200,000?
That would be, typically we ask for any owner of more than 20% or more in the business to provide a personal guarantee.
So a follow-up question to that one, Bo, do all of the owners that have 20% or over ownership have to sign the personal guarantee, or only one owner can do that?
Let me verify that, but typically it's all owners of 20% or more.
Okay.
But let me double check that for you.
Great, thanks. From Jeremy Reedy, nonprofits don't have a size limitation, so a nonprofit with 4,000 employees qualify?
Yes. So, assuming other areas are also qualifying, there's no size limitation for private nonprofits.
So, Ann Fritz, I think this question kind of relates to an earlier question. For the PPP, do nonprofits have to be a 501c3, or does it include all nonprofits?
For the PPP, it calls out 501c3s and 501c19s. For the EIDL, it doesn't specify based on those criteria. So our guidance has been that pretty much most private nonprofits, including religious organizations, are eligible to apply.
Are ineligible or
Are
eligible?
eligible. Are
Okay.
eligible. Yeah, not ineligible, eligible.
Okay. From Kyle Goff, single member LLC business income tax is members' income. Is payroll considered the business income or the members' withdrawals from the LLC, or neither? This is really a technical question.
I mean, I would say that you probably want to get with as you go through the loan process, talk to your accountant and your lender to work through that, because a lot of this stuff, again, we're still fleshing out the full guidance on this. And I'm sure that's where a lot of the interpretations of these sorts of things will come from. But right now we have is the final rule, which I recommend everybody look at too, because it's about 31 pages and it's pretty clear in its guidance.
This is from Jeremy Reedy. On the calculation of loan amount, the statute says to use the last 12 months. The application says fiscal year 2019. Which are we supposed to use?
I think probably speaking with your lender and talking to them and see what they want. But it's, I think that's probably the easiest way to do it, but it is prior year, but I can't say what a specific bank is gonna ask for. And, as the procedural guides come out that amplify the specifics of the final rule, I'm sure that'll be laid out more clearly as well. So I'm sorry I can't answer that question specifically.
So I have a question from Elizabeth Derrico, good friend. Hello, Elizabeth. My understanding is that PPP doesn't apply to 501c6 organizations. Can you clarify?
As of right now, the two types of nonprofits that it calls out in the rule are 501c3s and 501c19s. It doesn't address any other type of forms of nonprofits. Again, that could change tomorrow, depending on interpretation. I mean, we had other types of nonprofits that were formerly ineligible that are now eligible. So I'd say stay tuned.
Yeah, that's actually a very good point, Bo, because last Friday, the interest rate was 0.5%, and then all of a sudden, in a few days, it changed to 1%, as I understand it. So it's fluid and it's constantly changing. So as Bo said, stay tuned. From Cynthia Levin, can you include in payroll these people you pay by 1099 independent contractors?
So this is kind of a technical thing, and I think we're still trying to sort that out. So there's two places where you're going to look at payroll costs, right? You've got the pre part where the information you're going to provide to justify your payroll expenses. That's where you'd want to look at the list of eligible contributors to that. Let me hold on a second. I just want to pull this up because this is an important point, I think, as you figure out what the let's see. Stand by. And I just want to make sure that this is a really important point. I just want to make sure I give the right answer. What qualifies as payroll costs? Let's see. I don't think you include the independent contractor component, but don't quote me on that right now. I think we still need to get some further details on what that looks like. Certainly it's very clear that on the 75% requirement for payroll, that 1099 contractors are not included in that 75% calculation. And the reason for that is that 1099s can apply on their own for the PPP also. And so they don't want duplication of benefits.
So Bo's a follow-up question on that one. The 1099 and sole proprietors actually have an application that's going to open up this Wednesday, April 10th. Is that correct? It's a separate application?
On Friday,
On
April
Friday,
10th.
I'm sorry,
Yep.
on Friday. Okay.
Mm-hmm. Yeah, exactly.
Right. So Cynthia Levin's question is the same about 1099 as well. So stay tuned, Cynthia, on that one. Avery Oken, once you apply for the EIDL online and an application number is generated, do you get contacted by email for additional information or documentation?
Yeah, so if they need additional documentation, they will reach out directly. Again, we've had a high volume of applications, so you may not have heard back yet on those applications, but if you have a question about it, I encourage you to reach out to the customer service center, and they can answer questions. They can actually see in the loan system to see where your loan is, and that number is 1-800-659-2955. Again, that's 800-659-2955.
From Jill Snitcher, what are the restrictions on the PPP loan? For instance, are there strings attached that should be considered before applying?
I don't know what kind of string. I'd say it's a fairly flexible deal. I mean, really the strings attached are that when number one, you've got to make sure that you make certain assertions that are consistent with the intent of the program. And so that's you basically saying, yes, I commit that I am suffering impact from my business is suffering impact from the COVID-19. There's a number of other questions that basically you are attesting to that are the case. You also, but that's kind of the key part there. And then that you're providing the right documentation. Otherwise, there's not a lot of strings attached. There is for the PPP, there is no credit analysis done. There's no credit review. It is solely based on payroll and evidence of payroll.
So a follow-up question to that one would be, so it doesn't matter what your credit rating is because it's strictly on the payroll that you've got.
Yep.
Okay, I think there was a question that I skipped and that asked that question. Kelly Rodinez, does payroll and payroll expenses include the owner's compensation or only the employee compensation?
Both with a limit at $100,000 to be both counted in the initial payroll calculation as well as on the back end when you're looking at payroll expense.
Okay. From Stanley Busy, which is a follow-up to the 501c6 question, why are 501c6 professional associations not eligible?
I think that they're considered lobbying organizations, which I don't know. There may be something in the Code of Federal Regulations that limits access to those. I can't say specifically. That's a policy question that I can't respond to.
Right. Okay. From Sharon Grossman. Hi, Sharon. Can you comment on the applicability of the loans to sole proprietorships with no outside employees? Also, freelance contract employees that are currently without work.
Sure. So on the PPP front, it's really intended to address that very specifically. So even if you don't have employees, it specifically calls out sole proprietors, self-employed as beneficiaries because it is really payroll, right? It's compensation that program is targeted towards. So it's really focused on that. The Economic Injury Disaster Loan Program is more broad-based on working capital needs. So as a sole proprietor, I don't know what your kind of ongoing working capital expenses are, but that might not be as much benefit for you as looking at the PPP, which helps to provide income for you, and especially over these next 2 months plus, which it's designed for to help kind of you survive through those times. So I don't know if that answers the question, but that's kind of when you look at the intent, that's what it is.
From Kyle Goff, can client use PPP to pay back rent?
So rent for the business is an eligible expense, but I think I'd have to look at the rule again, but I believe that expenses that would be paid would have to be expenses after February 15th.
So if the rent is from, 2 months ago or a month ago, that would not qualify. It would have to be as of the date of February 15th.
I believe so, but I'd have to look at the final rule again and just verify that.
Which is constantly changing, though, right? The rules.
I don't know if the rules are changing so much as just the kind of surrounding information is, I don't even know if that's changing. It's just that there's a lot of people talking about this.
Yeah.
I would caution that there's a lot of information that's not correct in the public sphere. So, this is why I try to get out in front of these groups like you, is to just try and get the most accurate information, the most recent information. Again, the interim final rule is consistent. I do encourage, if you're interested in this program, you taking a look at it. It's not uber technical document. And I think it will clarify a lot of the questions and concerns that you may have.
Right. All right. From Avery Oken, how is the grant amount determined under the EIDL? You had mentioned that it was up to 10 million. Actually, I think she's asking about the grant of $10,000.
Sure.
But the loan itself on EIDL is up to $10 million.
EIDL is up to $2 million.
$2 million, I'm sorry.
Yep.
Yes.
So from the overall amount for the EIDL loan, basically the loan processor, my understanding is they look at 6 months of working capital needs for that business owner. And that's how they go around calculating the loan amount. As far as the EIDL advance, my understanding is that that is based on number of employees on staff. So headcount. I don't have the actual calculation about what that looks like. But it's up to, I want to clarify, it's up to 10,000. So it's not just a blanket $10,000 grant associated to that.
Great. Rue, good now. Hi, Rue. What kinds of payroll expenses are included in allowance for dismissal separation under the PPP program?
So again, that's getting pretty detailed, but basically it says that payment for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal, payment for the provision of employee benefits, but it doesn't give a specific amount that's limited to, although, overall compensation, again, is going to be limited to, kind of that $100,000 level. And you'd want to look, it's good, it's going to be looking at prorated, right? So any employee can't be compensated more than that $100,000 prorated for the year amount over the term of that, when you're looking at that 8 weeks or whatever for forgiveness.
We got another question from Cynthia Levin, but it's relating to 1099 independent contractors in calculating the 2.5 times the monthly payroll expenses. I think we've kind of addressed that one. Go ahead, Bill.
Yeah, no, I was just going to say that with kind of people that, applicants that don't have, that are sole proprietors or even just self-employed independent contractors, if they don't have like payroll records, things like that, if they can provide other supporting documents, it calls out bank records that can demonstrate income from the business, that, their personal income from the business, then that would be something that they can use to justify what their, payroll expenses are for the purposes of the PPP.
From Joyce Wood, what would you suggest if it has been a week since I applied and have not heard a thing on the EIDL loan?
Yeah, again, I mean, I'm not surprised that you maybe haven't heard anything specific yet, but I would encourage you to call that 1-800 number just to follow up if you are concerned. Did my loan application go through? Like those sorts of things. I get kind of the uncertainty, and if you don't hear back on a regular basis, that's what I would encourage.
From an anonymous attendee, can we include lease expense in the monthly number we put on our application, assuming for PPP?
Right, for PPP, no. So it's solely based on payroll expenses. Now on the back end, you can use some of the proceeds from that loan for lease expenses, but it's not built into that calculation.
Another anonymous attendee, if you have your own business and take a draw, as well as pay an employee, do you count both employee and business owner draw or gross net income for PPP is what you use?
I think what you're going to want to do with this is when you go through the process, number one, I can't give you specific advice on what that's going to look like. It doesn't necessarily call out draw specifically, but when you go through the process with your lender, I would lay out all of what you perceive to be your payroll expenses for them, and then kind of walk through that. And you might also talk to your accountant as well to get their advice on the process. We're not in the business with SBA of giving necessarily specific advice in cases like this. So encourage you to kind of go through that process.
From Teresa Conti, will SBA PPP consider including associations? Most of us are 501c6, Bar Association and Chamber of Commerce. Should we apply for both in case it is approved for associations? We have an application waiting.
So again, my guidance right now is that 501c6s are not eligible, but as I mentioned, if you've submitted an application to the EIDL program, they will review it and ultimately determine whether that's the case or not. So I'm just saying, kind of giving you what my guidance is right now, but that, doesn't preclude you from making application and having the agency say yes or no.
From Jack Weinberg, I'm an independent contractor with the state. I'm a solo practitioner. I usually just make expenses, no payroll. Do I qualify to apply for a loan? If so, which program? And is that forgivable? And last part of the question is also in the local newspaper this morning, it said independent contractors could not apply until April 10th. Is that correct?
Yeah, April 10th is correct. And again, I think really what I would recommend is you go to the SBA website under sba.gov/coronavirus and look at the two programs in particular and look at which one you think makes the most sense to you. It's hard for me to advise one way or the other based on your independent circumstances.
From Kyle Goff, client was working in office but is now working from home in home office space. Can a client use PPP to pay part of the home mortgage?
I would say again, I would recommend that that's something that I can't necessarily comment specifically on. I would refer to the person's accountant and or tax attorney to kind of give advice on that front, and their banker as well.
From Kyle Goff again, how do you define financial challenges?
I think that's up to the borrower to articulate what that means to them. I mean, so let me kind of give you some different examples, right? You've got businesses that maybe have their sales dropped off, but their existing customers are still paying for the time being. And so, they're not going to see that impact until downstream. Like that's one case where you go, oh, okay, I see this is coming, but because you have that leading indicator, right? Others maybe it's maybe you're accrual type accounting base and you're like looking at it and you're kind of like, oh geez, our accounts receivable is really aging right now. Our customers aren't paying us. Again, those are the kind of things that you would want to show evidence of. But again, I think that these programs, as designed are relatively flexible. It's just a matter of you, in your particular circumstance, being able to articulate the impact that you're seeing.
From an anonymous attendee, on PPP, will we get nicked if one of our employees decides to retire so our headcount reduces, assuming we don't replace him?
You could if you don't replace them. I mean, I don't know how, we don't have guidance specifically on how that will be calculated, but it does call out that, you know, the expectation is that both from a headcount and a payroll expense standpoint that, you know, that you're trying to remain consistent.
From Rebecca Troth, for the PPP, is it first come, first served, and no qualitative assessments are involved?
So it is, I mean, first come, first serve from the standpoint of, you know, the lenders, basically, you going to the lender and then them submitting it to SBA for approval. Yeah, it's, you know, there's no kind of prioritization, you know, where certain amounts go into one state, certain amounts go into another state. So, so yeah, I'd say it's generally first come, first serve. And as far as the analysis that happens on the PPP, it is all based on evidence of payroll. There's no credit analysis that's done on the borrower.
And there is no collateral also.
No collateral, no personal guarantee.
All right. From Rob Stein, can one apply solely for the 10,000 loan advance, or must the application be in conjunction with another loan application?
My understanding is that you can apply just for the advance.
From Aaron Heck, for a parent company with multiple operating subsidiaries, should a parent company apply for all subs on one application by the parent, or should each subsidiary operating entity apply separately in its own name for PPP?
So the entity would have to apply under one application. Each applicant can only have one PPP loan.
From Kenneth Smith, I have 2 automotive service centers and I'm with a bank of 14 years and won't work with me. I have ADP payroll and open accounts with them. I'm being told since I don't have any property business with them, they won't do the PPP program. I don't understand that.
I can't really speak to that. That's a bank determination on their front. It's not something that's a requirement as far as the PPP program.
From Carolyn Brish, do we have an idea what the 1099 application will include and the different deadlines?
So for the PPP program, we start accepting, or not we, but the lenders begin accepting applications for independent contractors on the 10th, which is Friday. The same deadline of June 30th applies for independent contractors.
From Kenneth Smith, who do I follow up with the SBA about a bank I have that's not following the rule at this time to lend to small businesses?
I don't have a good answer for you on that. I would refer them to I mean, you could call your local district office depending on where you are, and you can find that on our website at sba.gov. However, you know, not knowing what rules they're not following or whatever, it's hard for me to say one way or the other whether, you know, the banks have a lot of latitude as far as how they apply the program within their own constraints. So anyway, I'll leave it at that.
Yeah. So from Aaron Heck, is a closely held corporation taxed as an S corp but its sole W-2 employee, also the sole shareholder to apply as a small business, April 3rd, or self-employed on April 10?
That's beyond my skill set. It's just it gets a little bit more technical than beyond what I can handle.
Yeah, I think I would say check with your accountant on that one. Seth Chavez, for nonprofits that do not have owners, who is a guarantor, or how is guarantee handled?
Yeah, for nonprofits, the guarantor, so that would only apply to the idle loan. The guarantor is the organization, it's not any individual.
From Timothy Necht, do I understand correctly that FICA and FETA are excluded from payroll expense calculations for purposes of the PPP application?
Yes. And for the calculation of the 75%.
Okay. From Richard Kaplan, hi Richard. If a person has been convicted of a misdemeanor or felony, or is currently subject to indictment, information, arraignment, or other means of formal criminal charges, are they automatically disqualified?
I don't know the answer to that question. There are certain disqualifiers as far as ineligible ineligible businesses. And that's part of it. Is there's some component to felony applicants who are felons and stuff like that. But let me find that, and we can. It's in the final rule for sure. It's also in the application.
Okay. And we'll get back to you on that one, Richard, once I hear back from Bo. Delane Ward, is it possible that these two programs could run out of money?
Yeah, I would say yes. It's not an unlimited bucket of dollars that are out there. Although for the PPP, it's $349 billion that is authorized for the program. But yeah, they both could conceivably run out. There's a lot of need out there.
From John Talakia, what is the turnaround time for a PPP we applied and had it accepted on Friday? Also for the headcount, is there any requirement to keep on employees beyond the 8 weeks used for the PPP calculation? You said you can use PPP and EIDL, just not for the same costs. But as I understand, PPP forgivable expenses are only those which qualify for 8 weeks. And finally, can 10,000 and the EIDL be used for the same qualifying expenses after those 8 weeks payroll? It's a lot of questions there.
Yeah. So as far as the turnaround time, I'd say you need to talk to your lender on that. That's outside the scope of what we have control over. There's a lot of questions there.
For the head count, is there any requirement to keep on employees beyond 8 weeks used for the PPP calculation?
I don't know that there is specifically laid out in the final rule, but would encourage you to take a look at that. As far as the forgiveness, I mean, when I read the forgiveness component of it, what it calls out is that the bank affirms that over the period of expenditures, prior to requesting forgiveness for that loan, that those expenses and headcount will remain consistent. And I think it says that at least 7 weeks from disbursement would be the earliest a bank could go to apply for forgiveness. So that kind of gives you some idea of the timeframes they're looking at in order to qualify. Yes, appropriate expenditures were made and all that. So that's the best I can give you.
All right. From David Cohen, is there a link you can give us?
For all things SBA related to COVID-19, the best place to go is sba.gov/coronavirus. That has all of the program stuff for SBA, has other information for small businesses, employees. There's a lot there. So I would just encourage you to go there for the latest and greatest information.
So a few more questions, Bo. From Kenneth Smith, follow-up question that he asked on the PPP. He's trying to get, for my employees, my lender told me I need to have loans with them to get the PPP program. Can you explain why the bank needs this due to the PPP? Sounds like a relationship that you have to have with the bank before a PPP is given.
So yeah, again, I can't speak to that because that's not required per the final rule. as established, that would be an internal policy decision that the bank is making.
Okay, another question from David Cowan. I'm just going to read it. Also, can you apply for more than be accepted for less, such as apply for 100,000 and get 50,000? So it sounds like if you apply for, let's say, $100,000, but you only use $50,000, is that allowable?
So I guess trying to understand the question, but for the PPP, it's all based on payroll. So you could certainly request, say, hey, I don't want the 50,000 or 100,000. Say your payroll would say that you would be eligible for a $100,000 loan, and you're like, well, I only want 50,000. That's all I need. Then you could, I'm sure you could request that with your bank. That would just be a discussion that you'd have with them. But what basic payroll you wanted to cover. As far as the economic injury disaster loan, they make a determination on what your needs are. If you think that you need less, then you can always request less. If you think that you need more, you can provide additional documentation and get more. Or they'll do a follow-on analysis to see if you're eligible for more. So I don't know if that answered the question, but that's kind of the use cases that I see right there.
So I think there are some questions, but Teresa saying that there are some questions additional. From Jeff Null, on the EIDL loan with the duration of the pandemic unknown, how are we to estimate the loss?
Again, the way that the underwriter is going to look at it is 6 months of working capital requirements. So that's basically how they're going to do the analysis, and that's based on what you provide, the information you provide them. So,
all right. I know, Teresa, you have some questions. You want to ask some of those questions?
Sure. Something came through the chat area. I'm an executive director for both a 501c3 and C6. The staff is the same for both. Just confirming that I would have to apply through the C3.
Maybe, I don't know. That's a little bit technical for what I can answer right now.
All right, here's another one. Which program is better suited for a sole proprietor who has no employees, but has other business expenses such as rent, utilities, insurance, etc.?
I can't say what the best one is for you. You're going to have to take a look at both programs and what the use of proceeds would be, and ultimately what's most beneficial for you given the circumstances that you're facing. And I would certainly do that in consultation with my banker and my accountant, just to make those determinations.
All right, another one is, do businesses with only one employee who contract out other work qualify for PPP?
They would qualify for PPP for the purposes of the full-time or the employee and the owner, assuming that's kind of the case here. 1099s can apply for PPP on their own.
All right, kind of a follow-up question to that. Are temporary employees obtained through a temp agency included in the calculation of payroll costs?
Wait, say that again? I'm sorry.
Are temporary employees obtained through a temp agency included in the calculation of payroll costs?
I do not know the answer to that. I would, like if I was guessing, well, I don't want to guess. So, but it depends who you're paying, right? Are you paying the temp agency? Or are you paying the employees directly? In my experience, most temp agencies, you pay them directly and then they pay the employee. So that would be outside of, payroll cost specifically.
Okay, and I think most of the rest of them have been answered, but there is one that I see here. If your estimated impact is $10,000 or less and do not want a loan, is the EIDL advance still available?
Yeah, my understanding is you can still apply for the EIDL advance without applying for a loan.
All right, that's all I had.
All right. Are there any other questions? If not, we actually are at 1:59, so we have a minute to spare before we close the program. Again, Bo, thank you so much for being here and answering all the questions, because I know there are a lot of questions out there. The PPP program is so new, and lots of questions from many people. So thank you, Robert Steiner. Thank you, Bo. Please watch your email for a message from us that will include a link to the session. So if you want to play it again and you want to play it before your bar associations, or send the link to other folks, this would be available. And or any handouts from this session. Obviously, we don't have any handouts, but we do have, the recording. Please visit the NCBP 21st Century Lawyer pages for more information about our next 21st Century Lawyer. And the next topic we're going to talk about will be in wellness for leaders as a result of COVID-19. And our speaker on that one will be our very own Robin Wolpert. So again, thank you, Bo. Appreciate you being here to answer all the questions. And for all our attendees, thank you. Thank you so much for joining. Hope you learned a lot, and make sure, keep safe, keep healthy. Thanks all.
Thank you. Appreciate it, everybody.
All right, thanks, Bo.